explanation on technicals. We have Bala of Cash the Kiosk joining in for exactly that. Jay, thanks for joining in. So the bulls would be wondering if this is just a bit of a breather, just a pause after what's been a pretty good run, or whether there are signs of fatigue and exhaustion. What have you made of the markets and, where we are right now at levels of 18,300 thereabouts?
Thanks for having me on the show. The markets are running into an exhaustion zone, but I know it's just pending a reversal, like I said last week. And the marker for me on the Nifty is a close below 18,089. If that were to happen, it's a small range, 18,089 to 18,042. If we get a close below that, it's a confirmation sign that it's an exhaustion and a reversal. So at the moment, we are seeing signs of exhaustion, but we haven't got a reversal in hand yet. But looking at the other parts of the markets, it does looks like it might come through really soon. Probably, this market's going to hang around here for maybe a couple of days. But if 18,040 goes, I think the reversal is in for the market.
And if the markets do reverse after going down to levels of 18,040, we head down all the way to 17,500. What would be the levels?
Good question, Rima. Yeah, it's going to be a very dramatic decline. And we're going to May and June promises to be a couple of months of dramatic price action. But don't preempt the market. We are just waiting for the reversal to come through. It's always very sensible to play with the market. You can have an opinion, and I'm keeping my terminal on read-only mode. I'm waiting to pull the trigger. I usually trade the Indian markets using a double leveraged fund. So it's going to be pretty dramatic, and we're going to see the June lows of last year get taken out over the next 2-3 months.
Okay. So I mean, to use that view, is there any way to use that view? I mean, I guess if you believe that, then you don't go berserk on the long side, right? I mean, you be careful, trade small, and is that the way to do it? I mean, if you're trading, of course.
That's right, Prashant. Even when you're trying to go short, as I said, you've got to be very, very, very sharp and careful about it. You need the reversal to come through. At the moment, the markets are trending up, but as I said earlier, it's showing signs of fatigue and exhaustion. I pointed out a few strong sectors in the last few weeks. Capital goods, that's been doing pretty well, and FMCG have been pretty okay with ITC. So those are the strong pockets to stay with. But even there, you should start booking profits here. And yeah, the longs have to be pretty light.
ITC is today one of the big contributors to the decline. Is it still, of course, it's been such a big winner. What's the view there, ITC?
Yeah, ITC is probably got one last push up above the 2-week highs. If it does that, it'll be a textbook technical analysis compilation of what a reversal is and how it comes through. But we'll be very watchful. At the moment, it's still okay and taking the index up. As long as the stock stays above 409, I think it's still in a bullish mode. But right now, as we speak, even now, it's showing some signs of fatigue. But it's still not a reversal, so not to preempt the market. So as long as ITC stays above 409, I think the index will trend upwards somewhere towards 49,000, and the support for the FMCG index is about 46,500, 400-500.
What about PSU banks? Of late we've seen a lot of weakness in PSU banks, not just State Bank of India, but even mid-cap banks. Any thoughts?
Definitely, Rima. See, we had a out of the blue reversal for the banking sector a couple of days ago. We had a 1,000 points drop. A break below that low, about 42,500, will mark the reversal for the sector. And SBI today, in the last few minutes, has shown the crack come through. If SBI were to go down below 568, that will drag the entire sector. But to me, the weakest one is Canara Bank. I think against a risk level of 327, I think it's going down somewhere close to 260. So, mid-cap banks and other banks, in the POC space are showing signs of crack, and they're probably going to lead if the markets reverse at start.
Okay, by the way, I just want to pull up the Zomato stock once again, because this is serious pressure now that's building up. Almost 7% down move on Zomato. And that's a pretty big drop, considering the kind of steady run-up that we were seeing throughout the month of April when the rally was underway. That's today. Let's pull up maybe a 3-month, 6-month, or 1-year chart on Zomato. It will illustrate the drop that's come in after the April rally. Yeah, so there we go. A pretty good up move in the last 3 months, and now comes this big decline today. Any thoughts on Zomato? I mean, there's a lot of fundamental talk around food delivery, but I'm just wondering, have you looked at it on the charts at all, Jay?
I don't pay such close attention to the stock. It's generally it tends to fail a classic setup, and it's got a little bit of bounce to work with, probably somewhere close to 72. But I don't think the risk rewards are favorable for a trade setup there.
There is, of course, that ONDC. But the bigger thing, of course, is just so Swiggy's valuation got cut, right?
It's been quite dramatically. It was 10.7 billion, I think, in 2021.
So second time this year, it's down to 5.5, and the Zomato's valuation is now about $6.5 billion. So, and by the way, both are, I mean, from what I remember, almost equal market share, 50-50 between Zomato